Yeah, brilliant to be here. Thanks so much, Bryony, for the invite, and lovely to see some familiar and some new faces in the audience. So just in case you may not know who we are, so we've been around for about 40 years. We're a commercial bank. We're known as like the bank for the innovation economy, which means that we provide banking and lending services to high growth technology, innovation, life sciences businesses, as well as the investor community, so VCs, private equity investors and corporates. You can see on the left hand side our sort of financial highlights. We're quite a sort of medium, so I guess a small to medium sized bank in the US, and we've got a few offices dotted around the globe. I say the biggest one outside the US is in the UK. We've got roughly about 450 employees in the UK now. This is just really kind of another slide just to show you sort of the value that we can bring tech and VC organisations. I won't sort of spend too much time, but you can see a few of the sort of clients that we've worked with, that we currently work with, like World Remit, Skimlinks, Made.com. There's quite a few others there that we're not allowed to say, but you know, some big names in the tech ecosystem. So I'll hand over to Jarell, who will then kick us off for the market data.
Yeah, fantastic, and thanks for having us. I mean, so yeah, I mean, as Bryony, you were saying before, you know, we're kind of trying to recover from last year, and luckily it is good news so far. So I mean, as you can see on the top graph, you know, we've already matched last year. You know, these are statistics from the first half from 2021. So, you know, if we looking into, you know, the end of this year, I'm sure we're going to be completely outpacing 2020, which is obviously good if you're a founder, good if you're in the ecosystem. So lots of dry powder available, as you can see, and lots of opportunities available. Now, you can see we're still dwarfed by the US, but I think that this also shows that more people are seeing the EU and specifically the UK as a good investment and looking to get into the market. Something to mention, I'm not sure who's heard of Tiger Global. They just come into the arena, huge tickets, and it's just a good show of what is probably going to happen in the future, where the ecosystem is just fighting back against the woes of COVID. We've all heard of unicorns before. They're so 2015, and now we're talking about dragons. I'm not sure if any of you have heard of dragons before, but these are, you know, VC equity-backed businesses that are valued at 12 billion plus, or over 12 billion. So we've got the likes of UiPath, Roblox, and hopefully, you know, we're in Bristol now. We've got GraphCore. Hopefully, they'll be the first Bristol-based dragon. So, very good to know. Okay, again, another record year. So, looking at the chart at the very, very top. So, again, these are stats for halfway through the year. Europe, we've matched last year already, projected to be going way further up, and I'm hoping that by the end of the year we'll see much more positive statistics, as you can see there.
I think the graph here is unfortunately a few months old, but as Jarell said, you know, the kind of green figures that we're looking at, which is UK, Europe and Israel, you know, fantastic performance, capital raised by innovation companies across the regions, and I don't know what the latest sort of figures are. I know there's an Atomico report out tomorrow, which is the state of European tech. So I recommend everyone sort of signs up and has a look at that, because that'll have a lot more up-to-date info. But yeah, exceptional performance across UK.
Everything seems to be kind of up and to the right. And you can quickly see here, so, you know, a lot of these, those with the keen eye will see, these, I mean, 3 of these are, what is this? Fintech, you know, so fintech is kind of the place to be, and it's kind of dominating. So they're taking the lion's share of the large deals that are coming through, which is obviously worth noting. As we come out of 2020 and the first half of 2021, there's been a huge increase in the amount of IPOs that have come out. So looking at, we've got a breakdown here of the geography and where companies are looking to or have IPO'd. So historically, the UK is not really, the place to be in terms of IPOs. We're getting there, huge increase on last year, but I think naturally with the fact that fintechs are dominating, and they tend to be out of the Nordic nations, Sweden, Norway, which is seeing higher numbers overall. And then moving on to SPACs. So SPACs are special purpose acquisition companies. Now this is kind of a US phenomenon, but you should see the numbers are absolutely huge. Europe, still dwarfed by the US, but the numbers are still on their way up.
It's probably just worth noting actually that in terms of SPACs, they're obviously we've seen a huge rocket in popularity of that method of going public, in the past year, 18 months or so. But this data probably doesn't show it, but in the past sort of 3 to 6 months, we've really seen like a slowdown of SPAC activity. I think maybe the companies are just maybe viewing it as probably not quite the right way to go public, and are maybe looking more at the IPO route again. Yeah. But still quite interesting. We've seen a couple of big names like Kazoo and a few others sort of choosing that route. So we're still keeping an eye on it either way.
Now, this is kind of looking at the timeline in reference to COVID. Again, it's good news. We've seen an increase even after the initial dip from the pandemic. So, as I say, it's a good time to be in the ecosystem, because this year, first and second quarter, we've seen a massive increase in both not only deal size, but the deal amount, which is absolutely fantastic. I have noticed, and we've kind of seen that in seed and Series A, the raise amounts are increasing. I think it's just because these companies they're doing pre-series A. Yeah. It's becoming almost the norm now. So it's not just clients going straight from seed to Series A. There's usually a bridging round or a pre-series A, which is now becoming the norm. Pie chart here again breaks down industries. So fintech taking the lion's share, and then that's followed by life sciences. And this is very much probably to do with the pandemic itself. There's obviously been a light cast on pandemic healthcare, which has led to more companies being successful in raising in the healthcare and life science arena. It's obviously worth noting. And then again, really good news for those UK companies and those in the EU, that the US, the funds from the US, the VCs in the US, are now seeing the UK and the EU as a lucrative opportunity for investment. I think with the oversaturation and the competitiveness of the US, more funds are setting up shop in the UK, which is obviously seen as a hub to the EU, which is obviously good news for us. And I guess the smart money is now moving from the US to the UK. Yeah. So that's obviously worth noting, and great news for everyone here, great news for us as well. So I guess overall it's a really good news story.
And just to add to what Jarrell was saying, you can even see here that pre-Brexit, the sort of penetration was okay, but even as Brexit has become more real, and we're feeling it a lot more, and it's actually even conversely made us more attractive to US investors, as for the reasons that Jarrell said. There's more capital available, lower valuations. The UK is seen as a good hub into Europe. So we're going to touch just quickly on Bristol and Southwest funding data. I mean, unfortunately, the info is not super up to date. Apologies, we couldn't get sort of end of November. But you see on the left-hand side, past sort of 3-4 years or so have been kind of dominated by these like mega rounds. This year, I think this information is as at kind of August, I believe it was.
Halfway through the year.
Yeah, and I think Bryony highlighted already. There's been some great raises, from Ultraleap and a few others. So that realistically, that figure is probably a lot higher. And then you can see on the right-hand side, London is naturally going to kind of dominate as a region, but Southwest is a very respectable fourth. And I'm sure that figure will no doubt increase with all of the initiatives like what Bryony said, and Harry's Science Creates as well with Unit DX and Unit DY. I saw an interesting stat while we were compiling this data that last year Bristol attracted more VC money than many of its European counterparts, including Tallinn, Barcelona, Oslo, Madrid and Bucharest. So, really great, definitely on the map. So we wanted to just kind of take a step back and just think about, and we'll remind ourselves, like, why is this happening? Why do the numbers look so good? If you're a tech company raising VC. So a few of the points here. So interest rates, as we know, are super low at the moment. Inflation has been rising. So investors have been chasing returns across other asset classes. So in particular, VC, has recorded its highest returns across all private market strategies over the past few years, which has driven more interest in VC to new heights. So private capital availability is now unbelievably high, and dry powder is at record levels. And in conjunction with that, the risk appetite of investors has actually increased. So high growth tech and innovation companies are proving that they can generate hyper fast growth. So other investors they want a piece of the action. So I'm talking more about like non-traditional investors like hedge funds, pension funds, mutual funds. They're like looking at what's happening, and they want to get involved. And they're pushing further into the private venture markets, both in terms of value and volume. And if you can imagine sort of the high risk element of their portfolios is normally around sort of 5, maybe 6-7%. They normally dedicate a larger portion of their portfolios to equity, cash, property, etc., and only really dedicate a small portion to VC, normally around 5%, as I said. But that figure now is being pushed up to 10, 11, 12% in some instances. So it's really interesting. Also, the fact that the kind of public markets like VC technology is doing so well, it's actually driving more capital back to investors, and they're able to recycle that back into the ecosystem. I read a stat just last week that over $500 billion in US VC exit value has been generated in 2021 alone up to the end of Q3. So it's kind of creating a virtuous cycle, and that is very much a US thing, but is in some ways it's being replicated in the UK and Europe. So we're going to see hopefully a lot more of that. Just the kind of key takeaways. Liquidity in the private markets remains really strong. There's never been a better time as a founder of a tech company to raise investment for their company, because there's just so much capital out there. Great companies that are solving real problems will get funded. But at the same time, we want to just emphasize, we're not saying it's easy. It's never easy to raise investment for your startup, but there's more money out there. And it might actually also mean that there's more startups being created, because, there's just more money out there. It's more appealing to be a founder. And then VC is evolving as well. So the VC landscape, as Jarell mentioned, is becoming increasingly competitive. They're all chasing the best deals. You know, there's that FOMO element that we've seen. The valuations are creeping up, and you know, VCs have been pushed out to more geographies than ever before. US VCs are actually now setting up in the UK as a hub for Europe, as we mentioned. There's big VCs like Sequoia, Andreessen Horowitz, and a few others that are really looking at the UK and Europe and looking to do a lot more. And then the traditional kind of London-based VCs are now sometimes being pushed out of deals by these US VCs and are forced to look at other opportunities, and that's hopefully will benefit regions like the Southwest, Oxbridge, Midlands, Manchester, Edinburgh will start getting more interest from traditional London-based VCs who want to get into great companies here. And a lot of the time these companies I've found, just by spending time there, a lot of them are under the radar. So it's really for these VCs to be spending more time in these regions and uncovering those little gems. And then George, what do you do?
Yeah. And just another thing worth mentioning from the perspective of a company that's looking to raise investment in the next 6 months or so. If you've managed to survive, or I guess survive is probably the best word, but if you've managed to survive the pandemic, you've seen revenues maybe flatline but maybe slightly on the increase. If you've proven that your business works and it works through the pandemic, and if you can prove that you can still come through with good results, then that shows that your business clearly has some real resilience and obviously something worth looking into, if not investing into. And I'm sure that I think we've seen that VCs are taking that into consideration when they're looking for new opportunities as well. And then I guess lastly to finish up, so last point is diversity. The whole kind of diversity and inclusion point is something that's been highlighted during the last 2 years or so. So it's been great to see founders from different backgrounds and situations being able to raise funds and to get some visibility and finding opportunities as well. I think VCs are definitely looking for that as they push to be more inclusive overall. So I think
there's still a bit of work to be done. Obviously, the figures are looking more positive for underrepresented founders. Probably better than it's ever been, but still not where we need to be or want to be. So it's good that there's conversations and there's noise about it, but there's still quite, rightly so, there should be a spotlight on it to ensure that these founders are able to raise capital either from angels, VCs, crowdfunding, family offices, wherever it might be. So I think we wanted to add that on there just to show that there has been some progress, but there's still much more to be had. Ben, you got a question?
Sorry, just on that, I'm assuming those unrepresented founders that are able to raise, that's still skewing for obvious reasons to early stage stuff? Yeah, definitely. That's a really good point, actually. So there's definitely there's kind of incubators and accelerators that are focused primarily just literally bringing on diverse founders, and they're helping to highlight those founders out in the markets. But absolutely, kind of at the medium to late stage, there's a ton of work to be done.
There's still a bit of lag time between early stage and then getting up to Series B. That's all from me.
So that was kind of the end of our presentation. Thanks very much to everyone for paying attention and staying engaged. I hope you found that interesting and helpful, and actually would love to take on any other questions that anyone might have.
Thanks very much.